Bernanke served 8 years from 2006 as chairman of the Federal Reserve. He set monetary policy during the worst of the Great Recession. He chronicles the economic crisis and its aftermath in his memoir, The Courage to Act. The book is out in paperback today with an update featuring his reaction to the 2016 election. He left the Fed 3 years ago and is now a distinguished fellow in residence at the Brookings Institution. Good morning, sir.
Hey, good morning.
To listen to the Trump administration, a lot of their tax reform, a lot of their budgeting, a lot of their economic future is based on economic growth. And they say that they will get a 3.2 economic growth, annual growth rate. Is that achievable and sustainable?
Well, first, we want to do whatever we can to increase growth because growth has not been enough. But there are a lot of headwinds. We've got pretty slow growth in our labor force. We've got pretty slow growth in productivity. So in order to get growth up, we're going to have to move a lot. It's going to have to go a lot.
So is it achievable and sustainable?
It's probably not. No, not unless we get kind of lucky, honestly. But certainly we want to do what we can to improve our pace of growth.
You write that Donald Trump shocked the world, those are your words, by defeating Hillary Clinton with his dystopian assessment of the U.S. economy. What was dystopian about it?
Well, in some ways it was odd because in many ways the U.S. economy is doing pretty well. I mean, we've created 16 million jobs since 2009. The unemployment rate went from 10% down to 4.5%. Housing market's coming back. Lots of things are positive. And yet, Mr. Trump won the election by talking about 42% unemployment and things like that. So it wasn't accurate. There's not 42% unemployment, but he was right that there are some people who are being left behind.
Yeah, I mean, you write about that. You talk about some consequential negative longer-term trends in the United States. Slow productivity, you just said it, but also increasing income and wealth equality, and specifically the employment of men in this country.
Right. So, for example, as you say, inequality. Since the last 35 years, the income distribution's been spreading out. More people at the top, fewer people in the middle, more at the bottom. You mentioned participation, which means that you've got a lot of young men between ages 25, 54. In the past, they would have been working at a regular job. But today, about 12% of those men are not working or even looking for work. So those kinds of trends, which are very long-standing, they're not recent, have left behind a lot of people, and that's the kind of concern that Donald Trump tapped into.
Well, you write this, too. His ideological influence are diverse and sometimes contradictory. He just recently released his tax reform plan. Are you encouraged by what you see?
Well, on the ideological influences, it's a complicated political situation because he's got, on the one hand, traditional Republicans who are anti-deficit, pro-free trade, for example, and then he got populists who are, for example, against free trade. So he's got these different, trains of thought going on.
At the same time, yeah.
Yeah.
Are you encouraged by what you see?
Well, it's pretty early, and I wrote in my book that I thought that the markets got really excited after the election, expecting rapid changes in fiscal policy, regulation, and so on. And I wrote in my book that I thought because of these different political influences and the fact that even within the Republican Party there was a lot of disagreement, I argued it would take a long time for this stuff to be put in place. So I think it's quite early yet. There's not a whole lot in place at this point. In
terms of regulation, we did away with Glass-Steagall. Would it be good to bring Glass-Steagall back in terms of separating commercial banking from other banking?
So Glass-Steagall was a law that separated commercial banks, ordinary lending banks, from investment banks, which are invest in markets and so on. It's become kind of a symbol of the financial crisis, but I don't think it really had much to do with the crisis because you had regular commercial banks getting into trouble making bad loans, and you had investment banks getting into trouble in the markets. Putting them together, taking them apart, didn't make that much difference.
What's the best thing to do to deal with income inequality that you spoke to and the plight of the middle class? Is it simply economic growth?
Economic growth is important, but since it doesn't lift all boats equally, it's not enough. What we're missing in the country is enough upward mobility. So if you are born in the bottom quarter of the income distribution, if you are a lower working class person or you have single parent family, those kinds of problems, it's much harder for you to get up to the professional upper levels of our society. So what we need is a whole raft of things, including pre-K intervention, better schooling, apprenticeships, stronger college programs, a whole variety of things to get people better trained, give them a chance to make it up into the upper echelon.
You and I spoke when your book first came out, and I really like this afterward. I think it explains so much. And one of the things you talk about too, the president, has promised to bring back manufacturing and mining jobs to make America great. Is that realistic to try and bring back those jobs?
No, it's not realistic because, for example, coal mining, there's a lot of reasons why coal mining is declining. We have cheap natural gas, many other things going on. So it's better, instead of trying to go back to the past and reproduce 1960s assembly lines, it'd be much better to go to the industries of the future, but services, technology, finance, the whole range of things that we do well.
Yeah, and you talk about how that change is really what's upsetting the electorate, this change of how this economy has to change.
Yeah, people miss what they had, but you have to look forward and look for the opportunities in the future.
Thanks, Mr. Chairman.
Yeah. Thank you very much.
Thanks for having me.
Joining us today.